You must be so relieved. This has been a long path to getting here. Your stock has really felt that time pressure as well. How do you feel now that the deal is done and what it could mean for shareholders moving forward?
Well, we're pleased with the decision that came out of the arbitration panel this morning. We're also pleased with the decision that came out of the FTC yesterday regarding John Hess's eligibility to serve on Chevron's board. And this really helps create a premier international oil and gas company. We are one of the largest producers in the world. We've got the highest cash margin in our upstream business of anybody. We're one of the largest producers of both oil and gas in the United States, largest leaseholder in the deepwater Gulf of America, and have industry-leading free cash flow over not just the next couple of years, but out into the next decade now as we combine with Hess. So it's good for us. It's also good for our industry because this was a transaction that kind of, as you say, impacted, I think, our investors, the uncertainty, and it hung over the industry a bit because the question about what would it mean for potential future transactions is one that people were paying close attention to. And so I think having that resolved and affirming the industry practice that asset level rights of first refusal don't apply in a corporate level M&A transaction is one that's going to be very important for our industry.
I mean, Mike, one of the other reasons this industry couldn't keep its eyes off this case is because you had two giants, you and Exxon, really battling this out. But it doesn't end there. Shonali and I have been discussing it this morning. Now you have to work with Exxon. You have a JV in Guyana after this. How is that relationship going to be moving forward after this case?
Well, we work with people all around the world. Our industry is built on partnership because the scale of our investments usually requires partners to help share risk. We also pool technical resources in order to develop some of these challenging opportunities. And so partnering is very familiar to us. It's a core value. We put great pride in our ability to be a good partner around the world. We work with Exxon and other places around the world and have for many years. In Guyana in particular, most of the people that will be involved in this are going to be legacy Hess employees who've got years and years of history working together with CNOOC and Exxon on this project. There are good working relationships at that level, and all three companies have worked together to create the incredible value that is seen in Guyana and the prospects for the future. So I expect that those relationships will continue to be good.
But up till this point, there was a little bit of acrimony here in the pursuit of Hess when it comes to Guyana. When was the last time you talked to Darren Woods? And what can you tell us about the relationship that both of you are building in result of this JV?
Well, we see each other at industry functions and the like, and so we speak from time to time. But this has been a sharp difference of opinion. We believe that a plain reading of this contract, which is a confidential document, was very clearly, as I described earlier, that a right of first refusal would exist if there were a transaction at the asset level, but not at the corporate level. The arbitration panel has affirmed that interpretation, and so we'll move forward from here. But look, it didn't have to take this long. I wish it would have gone differently. We tried early on to find a way to resolve this and thought we were working together in good faith, and then abruptly we're notified that the other parties had decided they wanted to resolve this through arbitration. At that point, we believed we had the right side of this argument. We had to stand up for that, and that's taken some time.
Well, you mentioned the other win you had very recently was the FTC allowing you to put Hess onto the board. Is this a much more easier regulatory environment for you to be operating in right now?
Well, it has certainly been a change in the mood and I think in the policy that we've seen with the Trump administration. This is an administration that wants to use energy as a competitive advantage for our economy, which it is. Our country is blessed with an abundance of energy resources of all types, and it's not just oil and gas. It's solar, it's wind, it's coal, and you can go on. The agricultural resources that contribute to renewable fuels. And this is an administration that wants to use those for the benefit of the American economy, for the benefit of the American consumer, and that's proud of the American energy industry. And I think that's a welcome change for our economy. It's certainly a welcome change for those of us that operate in this industry and are committed to the U.S. And so I think it's very, very positive.
You mentioned a little earlier that it removes a lot of uncertainty when it comes to mergers and acquisitions. How do you think that this will change the competitive positioning of the industry through the remainder of the year into next year as many of your rivals, your partners, reconsider what their footprint should look like?
That's hard to predict. That's kind of a hypothetical. I can't really speak on behalf of others. But I do think that the clarity that contracts that are written to govern these ventures that we go into are ones that will not be used to peel assets out of a corporate level transaction is an important signal for our industry. We have companies that come into this industry, people who take risk and build companies from nothing. They grow them. Oftentimes the way that they get rewarded for that is by selling that company. And so it's the nature of our industry that transactions are part and parcel of how it functions, and something that might change the historic practice creates some uncertainty. And so I think with that uncertainty resolved here, you do have more confidence for people going forward.
This is also coming as you've been undertaking some restructuring efforts too. So with this deal under the belt, do you look at your oil and gas portfolio and say this is sorted now, or are there other areas that you're still looking to add on to?
Well, you're always looking to improve your asset base, and it's a depletion business. Every day we produce, and those barrels can't be produced again, and so you have to replace them over time. It's also a business that's very capital intensive, and so you need to be efficient. Margins are thin. Prices over time, really, if you look at it and inflation adjust, prices haven't changed much for decades. There's volatility along the way, but the industry uses technology and efficiency to continue to keep the cost of energy very affordable as an input to the economy. Those things haven't changed, and I think all of us in this industry continually look for ways to improve the productivity of our assets and the efficiency of our operations.
So speaking of affordability, it's interesting because on one hand, when you have oil prices below, this is WTI, below $70, last year around this time we were above 80. How does that change the calculus for how you want to address the industry? Remember, in the onset of the Trump administration, this was a market perception that drill, baby, drill would be the three words that define this year. But that's hard to see with this type of suppression of oil prices.
Well, we respond to market signals, and our company lays out a program. We invest for the long term based on a long-term view of prices. What prices do in any short period of time can influence the cash flow of the company and the short-term financial results, but they don't have a material impact on our longer-term plans because we develop assets over a period of years and often decades, and their lifespans are oftentimes many decades. So we take a long-term view on supply, demand, technology, competition, and price to set our capital spending plans. And they really don't, absent an event like COVID, where you see a dramatic contraction and a lot of uncertainty, we tend not to move our investment plans around over shorter term movements in commodity prices.